Hello and welcome to Finextra. I'm Emily Horler and I'm joined by Ricky Knox of Tandem. And we're at Fiserv's Banking on the Future seminar. Thanks very much, Ricky.
Thank you.
Why can't traditional banks move to a world offering digital services?
So the banks are doing their best to offer great digital services. The challenges are when the front end, which mostly they've managed to do a good job of, has to delve into their core banking systems, which in many cases are 40 to 60 years old. And for example, an application process or origination process for a product often involves all of the systems that a bank operates. And in those situations, many of their systems have manual processes or other reasons why, they have to stop you, get you to sign a piece of paper, pop into the branch with your passport. Because really these banks were designed in the days when people did branch banking and didn't do digital banking. So really the obstacles are legacy systems first. Second of all, to some extent, legacy profits. The banks make money out of, quite a lot of their money out of their back book, which is the customers who were getting 5% are now getting 0.0005%. And from somewhat painful fees and charges, but which constitute a very large part of their revenue and profit. And were they to give those up, the banks would be loss-making. So they aren't in a position to reform and change the way that they do banking to adapt to a digital banking age.
You've just been talking about the Uberization of banking. Do you think that Uber is an accurate parallel to challenger banks?
So I think Uber is a fantastic and very interesting company, and there are some interesting parallels around better user experience. So one of the things, but it's a little unfair maybe to attribute all that to Uber. There are loads of wonderful technology businesses that have made our everyday lives a lot easier. I mean, Amazon with their one-click shopping, 20 years ago, did a fantastic job of making it a hell of a lot easier to buy your Christmas presents. So I think there is that piece where I do believe that the new banks and challenger banks, bit of misnomer, but certainly the digital challengers will make it an awful lot easier to apply for products, to interact with your product, and to do servicing. However, I don't think Uber is a great parallel because actually what Uber has done is reinvent a business model. So at the back end of Uber is on the supply side are a load of drivers who previously wouldn't have been able to drive a minicab because they don't have the time to spend £400 for the weekly license for a minicab and then have to work 70 hours to break even before they start paying back and making money. Under Uber, you finish your shift in the supermarket, you can jump in your car, pop your phone and turn on Uber and start doing 2 or 3 hours of driving on your way home. And that transformation on the supply side is what allows them to offer dramatically cheaper pricing to the customers. And it's that dramatically cheaper pricing that has led to a real shift in the market and a massive growth for Uber. So I think, no, I don't think that Uber is a very good parallel for banking.
So how do you see trends such as big data and blockchain will be shaping the future of banking?
So I think both of those are exciting trends. I think big data has already had a big influence on banking, and I want to talk about that in a moment. But blockchain is extraordinarily exciting, and I think I said earlier at the conference, I think one of the technologies that will shape the next 20 years in terms of disruption. But first of all, to go to big data, I mean, my business partner Matt Cooper, who was co-founder of Capital One, invented something they called the information-based strategy in the late 80s, early 90s, where Capital One were for the first time using all the transaction data and any other data that they could gather on customers to much more accurately assess credit and make credit available to parts of the population that previously had not been able to get credit. In addition to that, they used that same data to find individuals out there in the public who looked like their best customers and market directly to them at the time through direct mail. Now, as one of the things that we do intend to do at Tandem is albeit much updated for today, use the same advantages of big data that Capital One did. The banks have found that really hard to apply because of the same legacy systems that we talked about before, which meant that they can't always access the data or even aggregate a single customer record in certain instances. So I think big data has already had a big impact, but I think it will have more impact. And I think probably will be, certainly in the next 5 years, one of the biggest drivers of change in banking. Coming to blockchain, much misunderstood, but blockchain versus Bitcoin, and I'm glad you asked blockchain and didn't say Bitcoin, but I think cryptocurrencies are something which is very interesting, but isn't really the fundamental building block. If you consider Asimo, the money transfer company that I helped to found with Michael Kent, Asimo already has a cooperation with Ripple, which is a business which has an alternative currency to Bitcoin that allows you to move very easily between currencies. And we're linked up as a node on the Ripple network, which allows us to move money very cheaply around the world and exchange. In particular, we use one Mexican bank that we're linked into that would allow us to pay out in Mexican peso very, very quickly. But I think that's an interesting example, because I think a large part of the application of blockchain is going to be in making some of the antiquated processes that sit at the back of the banking estate more modern. So a lot of it will benefit the banks. I think it may also lead to some new entrants who are able to do parts of the banking value chain more effectively than they were done before. But one of the great powers of blockchain is that actually, in theory, blockchain can take out the intermediary altogether. And you could argue that the bankers are the intermediary. The challenge is blockchain isn't very good at credit analysis just yet. So actually banks who really form an intermediary that assesses credit and takes credit risk are probably not the people who are going to be first to be disintermediated. If you were to take something like estate agents, for example, whose main function is to perform a negotiation and provide a trusted third party between two other parties on a house exchange, you might find that they would be more vulnerable to a technology like blockchain. But I think there will be a massive impact on the industry within the next 10 years, less so perhaps in the next 5. And we're already starting to see some of the stars in that firmament start to emerge. So I think it's definitely a very exciting space to watch.
Ricky, that's great. Thank you for speaking with us.
Much appreciated. Thank you.
And thank you for watching.